This is the last session, which has to do with the future of faith-based LARIBA banking and finance. And we have three very distinguished speakers. Professor Samy Hakim, who was professor of finance at the neck of the wood of Mr. Warren Buffett and the University of Nebraska. And Sam Hakim is a great scholar of finance. He worked for the Williams Energy Company as risk manager and also director of risk management at Entergy. That means he was slightly involved in the derivatives and stuff like that. No?
Yes.
Yes.
Absolutely.
All right. Very good. And he's now the principal with a company called Strategic Energetics, specializing in risk management. Sam Hakim, I have known him and his late father, may God bless his soul, and his family, and his brother, who is the chairman of the Muslim Public Affairs Council and who is here today to enjoy listening to his elder brother and his wife. My goodness, I'm very honored to have you all here. And he's going to be speaking to us, inshallah, on the challenges and opportunities for Islamic financial markets. Then we're going to be hearing from Andrew Cunningham and then Professor Mahmoud El-Gamal. Before we do this, I want to share with you some thoughts on our approach at LARIBA, on what we do. And this is a little bit hazy because I intended to make it hazy because of the dates. The dates are arbitrary. But as you know, people were doing riba banking until Moses and Jesus came, and then the LARIBA faith-based banking started growing, and it became affluent until the peak of it during the golden days of Andalusia. And with the decline of Andalusia, it started going down, and it was completely smashed out of business after the First World War and the decline of the Ottoman Empire. Now, from that time on, things were sleepy, and then they started slowly going up. And then you have one of three scenarios. One scenario is it will take off and catch up with the riba banking after a 600 years of slumber, nothing, or it will go slowly parallel and will never catch up, or it will fall flat on its face and it will die. And it all depends on dedicated young men and women like you and the future generation. And we hope, inshallah, we will make the difference and will make it catch up and wake up from its 600 years of sleeping. Now, what are the historic developments of LARIBA? Interest riba prohibited by all Abrahamic faith. This is a fact of life. Those who were not here this morning, we talked in the morning, a Rabbi, Yosef Kanevsky, two Christian scholars, actually three Muslim scholars, spoke about the fact that interest and riba charging is prohibited by all faith. And this is a fact, and it is on the internet, online. Then the Prophet ﷺ went to Medina, and then things went up, and in Spain they reached the peak. And then the different historic models during the Khilafah till the Uthmaniyya decline in 1917. And then what I call the village model by Dr. Ahmad al-Najjar of Egypt between the 1950s and 1970s. And then the King Faisal era. And this is the era of petrodollars, where there was a lot of money with people. And King Faisal said, we have to use Islamic financing. Then it became the preferred mode of operation of the rich and the affluent. And I call it, and then of course the development of the Islamic Development Bank. And then the emergence of what I call the Gulf banking industry and Islamic banking for the rich and affluent, what I call high net worth individuals in the 1980s until now. Well, actually, some people are making the mistake, especially in the West, that this is where they get their assets from. And they are making the fattest mistake in their lives, because this era is over if they don't know about it. And the real era is what's happening. the real communities in the West, especially in the United States. This is the community that we need to focus on. They don't know what is brewing out there on the campuses. I happen to know because I go to campuses, and you will see something you have never seen. This is where the resources are. It is not in Bahrain. It is not in Dubai, despite the fact you see all of this facade that you see on the surface. What the real thing is here in the United States. And then unfortunate things happen. In the 1980, 1990, the Egyptian Islamic finance companies used Islam as a front, except one company called Al-Sharif. Others used Islam as a front to gather people's savings that they worked very hard for in Saudi Arabia and the Gulf countries, and they lost it. They speculated in gold in the name of Islam. They lost money in the name of Islam, and they got to be ashamed of themselves in the name of Islam. And then the Turkish experience, which happened twice. Once recently, where people went to the German Turkish community, people in Germany that worked very hard to save money, and they lured them with the greedy instinct of getting their money and promising them 25% return. And guess what? They lost their savings twice in Turkey. So these clouds of suspicion have been actually gathering over many Islamic banking experiences. And then the seventh point is really the most significant one, and that is the Malaysian experience, which is what I call Islamic banking at the central bank level. For the first time in the history of LARIBA banking, a central bank advocates the idea, the Prime Minister buys and believes in the idea, and for the first time a central bank acts as a banker of last resort for an Islamic banking system. And for the first time ever, they ask different commercial banks which deal in riba to offer LARIBA banking windows. And this is the Islamic banking window in riba banks. And then the European venture in Islamic banking, Luxembourg and Denmark, they all went bankrupt because, again, the intent is very important in the success of this business. Al-Baraka Bank of London was closed because the government said if you don't have a bank in Saudi Arabia, you cannot have a bank here. And Dar al-Mal al-Islami in Geneva, Switzerland, lost tons of money on the so-called Islamic deals, which really looked on the surface as Islamic, but inside they were corrupt to the core, and I'm sorry to say. And then the European private and commercial banks, this is like Pectet, like Citibank Europe, so on. What they are doing, using the Islamic, you heard it from the Dow Jones, niche market, so they can attract funds. And God knows what happened to these funds. Actually, I know that after the Gulf War, a nice person with a check of $1 billion went into the offices of a Swiss bank corporation. He said, I am from the government of such and such country, invest this for me. And he didn't know anything about Islamic finances. They called us and we told them how to do it. This is long before the Dow Jones Islamic Index came in, and you know what happened has happened. And then comes the American scene. American finance house LARIBA, we are independent. We do not owe anybody anything except Allah subhanahu wa ta'ala. We're not involved in ISNA, we're not involved in ICNA, we're not involved in any organization. We pride ourselves that our capital is from here. And we are independent. And we put our money where our mouth is. We do not use other people's money. It is our money. If we lose it, I lose it, and others in the shareholders lose it. And then MSI was a subsidiary of ICNA. ICNA is Islamic Circle of North America. It's mostly Indian, Pakistani, located in New York, but have a nice gathering. ISNA, Islamic Society of North America. Al-Baraka Bank Corp in California closed down in Chicago a year ago. UBK came in 1998, sat for a year and a half, closed down. They didn't tell us yet why they closed down. And then there are different American private banks. Now, let me tell you something. My motivation, our motivation in doing this is to win paradise, and Allah is our witness. Mike, all of us are in it to win paradise. I don't know if one of the largest banks, Hong Kong or whatever it is, the chairman of the board is in it because he believes that if he does it, he will win paradise. I have no idea. But this is between him and Allah subhanahu wa ta'ala. Now, we are not in it to make the profit, we're in it to really and seriously win paradise. And then the European Americans seen the Gulf War, lease funds, and Islamic stock indices funds, and this fund and that fund. They were all mutual funds in the name of Islam to attract funds under the guise of Islam, not to invest it in the local communities, but to invest it outside the local communities. And of course, the mergers and acquisitions. This is in a nutshell the history of Islamic banking. Why should we have LARIBA, faith-based banking? Number one is job creations. Everybody agrees on that. But in our case, it's job creation for those who are discriminated against, in addition to others who are treated equally. Now, the discriminated against, there are ladies today who cannot get a job, especially these days, because they're wearing the hijab. Well, if there is an outlet for them, they can do that. Now, political satisfaction for the masses. Some countries say, okay, I'm going to give you Islamic banking, and I'm going to bring you the big institutions, the fast and rich and famous, so they can put the masses to rest and to happiness. Market niche to make money and gather assets. Yeah, I am doing the market. As a matter of fact, if you noticed, you will find that there is a lot of international banks opening up shop in Dubai. Why Dubai? Because most of the money that was sitting in the United States and in the West moved back to Dubai after what happened in 9/11. Now, somebody wants to capture this market, and that's how they do it. And then the last objective, which I subscribe to, and that's the removal of riba from the world so we can win paradise. This is what we're out for, winning paradise. What is our credo? And this is very important because this is truly what we all at American Finance House believe in. The prohibition of riba is an important pillar of the faith and the belief in God in all Abrahamic faith. We believe in full transparency, and it is a must. There is no hidden agendas. And everything we do is on the internet. You can read it in dollars and cents. We do not hide anything. And I promise you, there are so many things that are hidden in the closet in the so-called big name Islamic banks. I know it because I know the inside story very, very well. Number three, compliance with the laws of the land. We comply with the laws of the land. We are not out to change the laws of America. We are out to comply with the laws of the land without violating God's law. And that's the most important proviso. No politics. We are not in politics. We do not understand politics. We do not have a hidden agenda to change governments. We are not in that business. We are in the business of serving people so we can win paradise. Very simple-minded objective. We are not in the business to get elected or to influence people or discredit others. And we believe firmly that credit is a human right. Number five, a commodity, tangible asset and or service must change hands at a fair market value using the concept of market to the market developed by Dr. Mahmoud El-Gamal and ourselves, and very happy to promote that concept. Number six, speculation and its tools and paper trading are prohibited. We do not believe in it. And if it smells like interest, walks like interest, talks like interest, walks like speculation, walks like paper trading, and it calls itself profit, it is still interest. And it will be dealt as interest. And we will go to bad repercussions if we apply it. Number seven, promotion of community development is our prime goal. And reinvestment of that asset is our prime importance. Number eight, social responsibility and ethical behavior are the foundation of our business. And number nine, we're out to win paradise. We must start from the, what's our strategy? We start from the possible to achieve the impossible. We are not out to destroy the riba or conventional banking system. We are out to provide an alternative to people so they can choose from whatever they like. We are not in business to change the laws of the land. We shall do our best to educate and guide government, banking regulators, and politicians about what we believe in and our system. We're very delighted that we have gotten together with Freddie Mac. We're honored. We're thankful to Almighty God that we got together and we were able to explain to them what we are, what we stand for, and how we operate to conclude what we have done over the last 10 months. We are also communicating very aggressively today with the Office of the Controller of the Currency, soon with the FDIC, soon with the Federal Reserve Board, Uncle Greenspan, so we can make sure that they understand what we're out. We're not out for anything but to provide a humble alternative without violating the laws of the land. We are in business to offer solutions and services that will help reduce the influence of riba in people's lives. We must reach as many community members as possible through usefulness to the community, unselfish participation, active community service, efficient use of channels as places of worship. My dream, my vision is to have one of our outlets next to every masjid, every mosque, every synagogue, every church, every Buddhist temple, everywhere in the world. And I wish I will not die until some of this will be realized, inshallah. We utilize the name LARIBA. You will find that all of our literature, we do not invoke the word Islamic. We believe that the word Islamic has been overused, abused, and not respected. We want people to judge who we are, what we stand for, what we believe in, based on what we do, not what we call ourselves. And we promise to live by Islam and to project a humble, dedicated serving, non-wasting, and attentive attitude to everybody, to the poor before the rich. We are out to serve, to attract, and to appeal to all people of all groups, irrespective of religion, affiliations, background, denomination, because we believe that Islam is a spiritual nationality. Islam is not reserved to the Arabs, to the Pakistanis, to the Indians, to the Bangladeshis. It is a spiritual nationality that's available to the whole wide world. And we are out to serve everyone with no discrimination, because discrimination is a sin in my belief system. Our motto is very simple, and that is what the Prophet ﷺ was reported to have said. خَيْرُ النَّاسِ أَنْفَعُهُمْ لِلنَّاسِ. The best of all people are the ones who are beneficent to others, who benefit others, who make a difference in other people's lives. And our planning horizon is not 5 years, our planning horizon is 50 years. So we have second generation like Mike Abdul in place. We have third generation like Sharif Abdul and others in place. And we even have fourth generation, because every summer we have at least 5 trainees from high school and universities. So inshallah in due time we'll have a new force that will be a fresh force that we hope will change the world. Our goal and vision is to establish a truly global banking service system that offers our products. And we want our products and services not to be only attractive to faith-based LARIBA bankers. We want them to be attractive to riba conventional bankers. We want them to come to us and say, we would like to have your products because they are less expensive, more efficient, more attractive. That is our goal. That is our objective. And then the approach. What is the strategic approach? There is a strategy by the Prophet ﷺ and in the Seerah which says, مَا لَا يُدْرَكُ كُلُّهُ لَا يُتْرَكُ جُلُّهُ. And whoever wrote this, because I don't have Arabic, so I sent it and he made a mistake. Whatever cannot be achieved in its totality cannot be used as a justification to leave it alone. It is your duty to start from the possible to achieve the impossible, like the Prophet ﷺ was reported to have done, starting from the possible to achieve the impossible. ما خير رسول الله صلى الله عليه وسلم بين أمرين إلا واختار أيسرهما. First, start from what's possible and gradually go to the more difficult solutions. The fourth point is we want to know our size. رحم الله امرأ عرف قدر نفسه. God bestows peace of mind, mercy, and happiness unto people who know exactly what their size is. You ask me what's my size? I'm a little ant. Now why am I a little ant? Because we're dealing in $25, $28 million. Look at Freddie Mac. They dealt last year in $380 billion. Billion dollars, right? So we are a little ant. We are not ashamed of saying we are ants. The shame is that you are an ant and you stand out and say, I'm an elephant, and you are nothing. So we want to know exactly what our size is, hoping one day, inshallah, we're going to have the aspiration, the hard work and dedication, so we can be big, and we will, inshallah, Rabbil Alameen. And this is our mission, is to build a system that is for all, that's socially responsible, inshallah. What do we have here? This is company policy. We finance socially responsible projects that benefits the community. We offer products and services that are competitive with those offered by riba banks. In other words, you cannot come to me and I do a financing for you and the rate of return is 10% while Bank of America gives you the same product for 6%. That becomes sorcery. That becomes useful use of the Islamic word, but you will be, inshallah, punished by higher authority. We have to be competitive with everybody. Now, I want to finish here, and I want to show you the fact that we are very, very conservative. We have a saying in Egypt. I come from Egypt, and I'm going to say it in the Egyptian Arabic language, and then I'll translate it. It says, اللي يتلسع بالشوربة ينفخ في الزبادي, which means if your lips get burned by sipping soup, you end up being so careful. Even when you eat yogurt and ice cream, you blow in it to make sure it doesn't burn your lips. We're very conservative, boringly conservative. We are really very happy to report that over the last 14 years, all we had were 2 bad loans. 2 bad loans. And when the auditors look at this, they can't believe what we're doing. So how can you do this? Because we know every member of the community. We know the person, his wife, his kids, which masjid he goes to. This is what they teach us in the business school about the first rule of financing, and that is know your client. And it is our money. We do not want to lose that money. So this is our most important thing. Why? Because if we use the word Islamic, and we are not fair to the word Islamic, and we lose people's savings in the name of Islam, guess what? The person who lost his money will tell his kids, never deal with these Muslims. They are liars, they are thieves. And the reason he cannot go to this university is because I gave my money to the Muslims. Not only this, but that son will tell his son. And that sad thing will propagate over 3 generations. And if you do this, if I do this, I'll be participating in the biggest crime that I can ever stand up before Allah to protect myself of, inshallah.
What I'd like to share with you is just a few thoughts on Islamic banking and the development of Islamic financial markets. And I'll start by giving you perhaps just a background about the current situation and where we are, and hopefully try to relate this to the non-Islamic financial world that we live in, and relate that to some crises that we have seen recently, and hoping to learn some lessons about how we can improve going forward. First, just to indicate that the lack of a central religious authority in the central religious authority in Islam in terms of finance has been a source of confusion, and I think this has slowed to some extent the progress of the development of Islamic financial markets and institutions. So what happened as a result is that Islamic banks have formed their own religious boards who would act as advisors before introducing any new instrument to the market. And sometimes the differences in the interpretation of what is a haram and what is halal in terms of these financial instruments have led to a situation where the same instrument may be perceived as okay by some and not okay by others. So against this background, you have the current financial markets that are not structured easily to adopt really Islamic financial institutions. And so there's a lot of challenges that these Islamic financial institutions have to overcome, and that's why I think in the slide that Dr. Abdul Rahman showed you earlier, some of them had been able to leave the market and not being able to survive. And obviously the ones that have strong procedures and resources have been able to survive. So on the regulatory side, you have the existing banking regulations in most Islamic countries that are based on a Western model, and that Western model, as you know, includes a lot of interest and things that are not acceptable in Islam. And on the accounting side, There's issues about transparency and surveillance. Any kind of Islamic financial system obviously needs to have some strong accounting procedures and standards. It's important that you obviously intend to do good, but it is also important to realize that sometimes you can also cause harm, financial harm to others, even though your intentions are good. So it is important to have well-defined procedures and standards. In Islam, there's no SEC, there's no FDIC, and so the Islamic banks have had really a double duty to first police themselves to make sure that they abide by Islamic principles, and at the same time also obey the laws of the land in which they operate. And so there's a double challenge here to overcome these difficulties. At the same time, one of the important rules of Islam, the inability sometimes to not sell short certain instruments, have forced Islamic banks to maintain a lot more liquidity than others. So if you look at the typical Islamic banks, they tend to have 40% more liquidity than their counterparts. And I think this is an important characteristic which needs to be stressed. And then obviously the Islamic institutions operating in non-Islamic countries, they have this duty to operate according to Islamic principles while obeying the laws of the land. Let me turn to the Western model for a second and just point out some important financial fiascos, crises that have happened over time, starting with the savings and loan crisis back in 1989. This was obviously the biggest crisis that this country had witnessed, to the tune of $240 billion. Just to give you an idea of how significant this was, this is approximately, if you assume there's about 100 million taxpayers in this country, this is about $2,400 of your tax dollars and mine that have gone directly to subsidize this important crisis. And so, this raises an important aspect about what is going on and how we can improve that system in which we operate. There's also a lot of other fiascos along the way. I've just had a short list here. There's obviously a lot more. I mean, obviously you here Orange County stands to your mind. There's also Nomura, there's Allied Irish Bank. There's a whole host of companies that have really suffered as a result of a lack of transparency and accounting rules. Lately, obviously, is the Enron fiasco, and I'd like to briefly talk a little bit about that and see how we can relate it to the Islamic perspective. Last October, Enron is a big energy company. I think it was the number 10 public company, number 12 public company in the world. That has surprised the market by suddenly announcing that it lost about $1 billion as a result of some partnerships that were controlled by the chief financial officer of that organization. And so all of a sudden this organization, this corporation, had to take about $1 billion in losses as a result of these accounting irregularities. Following this event, there was a class action lawsuit by the stockholders which actually owned the shares of Enron, alleging that Enron management had misrepresented the financial condition of this organization by trying to hide losses through these suspicious partnerships. And so what followed after that is a big, soap opera, a financial soap opera, if you wish. There was a bankruptcy, there was a suicide of a suspicious suicide of a senior Enron executive in his Mercedes in Houston. There was allegations of cronyism and denials, and obviously this whole incident had reached all the way to the White House. So evidently this Enron fiasco is a prominent case of what we call in finance corporate governance, or the failure of corporate governance. Let me just touch briefly on what corporate governance means and why it is important to recognize. Corporate governance is simply the nuts and bolts of corporations trying to fulfill their responsibility and duty before their shareholders and the stakeholders. And there are three main components of corporate governance. One is to have transparency, second is to have accountability, and last is to have disclosure of your activities. And we see that in Enron, disclosure was an important item that was missing, as well as transparency. When we try to relate that to Islam, we find, for example, that the concept of corporate governance, which was put forward in the West as a result of obviously a lot of financial crises and bankruptcies that have hurt many stakeholders, we find in Islam that there's something actually very similar to it in the Quran. For example, the second surah in the Quran, Surah Al-Baqarah, talks specifically about the steps that two parties need to follow when they are transacting. And if you read the surah, the ayahs, the two ayahs very carefully, they detail the steps that you have to follow. And what is emphasized in these two ayahs is really the bookkeeping. Is really the importance of bookkeeping, and the Quran goes into a lot of detail of what happens when one bookkeeper may not be available and so on, and obviously this is very important. So the message behind these two ayah is the need to have transparency and the disclosure of the business dealings when you are transacting. And these are obviously the important principles of corporate governance today. Another important ingredient of corporate governance is accountability. And so when we look to the Prophet Muhammad ﷺ, how he suggests to deal with the issue of accountability, he says he has a very important hadith in that regards. And so if you translate this tradition into modern business dealings, you have to be accountable for the actions that you perform. Just recently, as you know, the Justice Department also had indicted actually Arthur Andersen for criminal misconduct in relation to what happened with Enron. Arthur Andersen is the accounting firm, the auditing firm of Enron. And what was interesting in the indictment of the Justice Department is that they indicted the institution, not the individuals that actually did the misconduct in that institution. And so here, one has to ask questions about, why should individuals that were not part of Enron, had not really heard about Enron, but actually worked for this accounting firm, all of a sudden have to be responsible for the action of that institution. So, this idea of a collective damage on the corporation is something that also needs to be looked upon from an Islamic perspective. Let me turn to some other civilizations, non-Islamic civilization, and see how they look at corporate governance from their perspective. If you recall, back in the early 90s, there was a big financial crisis that inflicted a lot of harm on the Southeast Asian economies, Malaysia, Korea, Thailand, Hong Kong. And one of the important problems that mutual fund managers and financial and banks in this country have tried to relate to these countries is that you don't have good standards, that you don't have transparency. And so the focus really was shifting not on perhaps problems that exist in the way these economies are operating, problems like exchange rates or capital flows and what have you, but really they thought that the problem was corporate governance. You look at, for example, Japan, and you find that Japan does not have a Federal Deposit Insurance Corporation. And so when a bank fails, what happens is that all the other banks try to form together a partnership to save that bank that had just failed. So they take full responsibility of that bank that had just failed. So laws obviously are very important, and but there has to be, in addition to these laws, there has to be some ethical platform to parallel these laws. Otherwise, you know, these laws may not be, they would remain on the books and no one really practices them. So it is important to identify and have clear guidelines to institutions and identify the roles and responsibilities of the institutions in that corporation. So you have to have a comprehensive code together with some good legislation to balance the acts of the individuals in that corporation and have good disclosure, not just by senior management, but also by all the way down to the individual bookkeepers. You know, without providing the safeguards, investors are simply not going to be placing funds in institutions that may not have good transparency. And so from the perspective of Islam, obviously deeds are more important than words. Otherwise they simply remain you know, words can have an empty meaning sometime. Corporate governance should be practiced in the form of deeds and actions and throughout the organization, and should not be limited to senior management, but should always trickle down to the bookkeepers by providing the safeguards, for example, for the whistleblowers that would tell you about a problem that could perhaps lead to a major investigation like what happened with Enron.
Thank you very much. Now we have another very dear friend of mine. It's amazing because as you go to conferences and meetings and you meet people and so on, God exposes you to so many gifts in this world. And of course, like, you know, somebody picking up jewels from the market. So I am in the business of picking up jewels. One of these jewels was, of course, Samy and many of the speakers you have seen this morning. And another jewel I picked up 2 years ago. I went to Harvard, and he stopped. You talked in an afternoon, not too many people listened, right? And I was sitting up there and listening to you. So I went down as this man is a big man from Moody's. Moody's is an agency, an independent agency that actually evaluates based on the corporate governance and the accounting system and the profitability and the balance sheet. They decide if this company is a high-class company or low-quality company. If it is a high-quality company, they can go and borrow in the riba markets at a lower interest rate. If they are a lower grade company, they go out and borrow at a much higher rate, and so on and so forth. So Moody's is a very, very... So I went and said, well, would you be kind enough to come and participate in our conferences? And he was gracious enough to accept. He came last year, and we're very, very honored to have him again this year. Andrew Cunningham is a senior vice president with... You were a vice president last year. You got a promotion. Maybe because you came to California. Keep coming. You'll be a president very soon. And senior vice president with Moody's Investor Service, the international rating agency. He's based in London and is responsible for the analysis of different corporations, banks, and corporate credit markets. So he's an expert on banks. And actually, he lived in Egypt for 1 year, and his expertise was in the evaluation of Islamic banks. For most of his career, he has been involved in analysis and writing about the Middle East financial institutions. He has a degree in Arabic and Islamic studies from the University of Exeter in England. And he speaks Arabic with an Egyptian accent. So we're very happy to have Andrew with us. He's going to be speaking about what happens after 9/11. Andrew.
Thank you for that kind introduction. I'm a little man from Moody's, not a big man from Moody's, by the way. Thanks, as always, to LARIBA, to Dr. Yahia and his colleagues for putting on this conference and for giving me the opportunity to speak. if I've counted correctly, you've listened to 13 presentations so far today, and all that stands between you and a well-earned break is me and Mahmoud. So I think we'll keep it fairly.
Many questions and answers. Many questions and answers. Yeah.
What I'm going to do is I'm going to read the abstract summary of the paper that I have, and that'll take a minute or two. And then I have, after that one, 6 slides. So I'll speak briefly on each of those 6 slides to try to amplify some of the ideas. And as Dr. Yahia has implied, where I'm coming from here is that most of my career I spent writing about or analyzing Middle Eastern financial institutions. I'm less involved in that now, more involved in European capital markets. So what I hope I'm doing here, what I hope I'm bringing to the party, is an understanding of Middle Eastern Islamic financial markets, but also now of Western practices and regulation. So the underlying points I'm making here are that the events of 9th of September and their repercussions will constrain the development of Islamic finance to some extent, but particularly in those areas where Islamic finance interacts with Western capital markets. But the extent of those constraints should not be overestimated. Many of the multiple aspects of Islamic finance are driven by religious piety and social sentiments, often both, and these are impervious to the heightened scrutiny of Islamic institutions and the increased hostility to Islamic institutions, which we've seen coming from some circles since 9th of September, since 11th of September. One of the clearest consequences of 9/11 will be the demand for greater disclosure by financial institutions and with Islamic connections. But this should be seen in the wider context of international moves to improve accounting and auditing standards after events such as Enron, and a desire which predates 9/11 to tighten the regulation of offshore financial centres, and moves to strengthen and standardize financial reporting, again, which is a long-term trend which predates 9/11. The effect of 9/11 on domestic politics in Muslim countries will also impact the development of Islamic finance. I'm going to be frank here. Regimes with Muslim populations, undemocratic almost without exception, now face a heightened challenge in managing popular Islamic sentiment, which has been stirred up both by the events of 9/11 themselves and by the West's response to those events. On one hand, such regimes need to allow Islamic sentiment to vent its anger. On the other, they're seeking to contain any Islamically charged challenge to their right to rule. So the treatment of private Islamic institutions, including financial institutions, is a significant tool in managing that Islamic sentiment. Those are the broad themes. I'm going to run fairly quickly now through 6 slides. And I'm starting off with a quote. It's very bad practice. You should never start a presentation with a quote from someone else, but that's what I'm doing. And this is from Fred Halliday, who wrote a very good book, which was published just a few months ago. There are 2 frequent responses to any great historical event, both inappropriate if not downright mistaken: to say that everything has changed and to say that nothing has changed. The book by Fred Halliday is called 2 Hours That Shook the World. It's an instant book that was published. He updated some of his writings on Islam, about anti-Muslimism and that what's behind that, and I would commend it. And I put down 2 points to remember here. The Casablanca Economic Summit in 1994. I remember reporting on that economic summit, and many of us, and I was at fault along with others, believed that Casablanca Economic Summit would change irreversibly the economic relations between Palestinians and between Arabs, including Palestinians, and Israel. And we were wrong. In fact, it changed very little. And the Arafat-Rabin handshake on the White House lawn, again, was seen as a watershed in relations in the Middle East, and as our televisions unfortunately show us at the moment, to some extent very little has changed. There are, of course, watershed events, so the Iranian Revolution, the 1967 war, so we shouldn't underestimate that. But the point I'm making here is that we should keep a degree of perspective, tragic and awful though the events of 9/11 were, if we're looking at the impact on financial institutions, on Islamic financial institutions, let's keep a sense of perspective. The main impact of 9/11 on Islamic financial markets will be in that area where Islamic financial markets interact with Western financial markets. For example, we're seeing that some Western institutions are just more careful, they're more wary about dealing with Islamic financial markets. Now, I'm not going to get into a discussion about whether they're right or wrong to do that. I'm just saying it is happening. Western institutions may curtail the expansion of existing Islamic operations, and in fact, I've seen one example of the reverse. A Gulf-based institution which was planning a major Islamic initiative, and after 11/9 decided that it was not going to do that. And there's a possible reduction in the availability of interbank facilities from Western institution to Islamic banks. I was talking recently to the man who effectively runs interbank credit for an Islamic institution in the Gulf, and his job is to go around the Western banks and try to build relationships with them. And he was saying that yes, it did become a little more difficult after 11/9. But bear in mind a reverse effect here, which is that the effect of anti-Muslim sentiment in the US after those events made a lot of Muslims uncomfortable about remaining here. And some of them went back, and a lot of them have repatriated their money back. No. But many aspects of Islamic finance will be completely unaffected by the events of 11/9, because and these are the areas which are managed primarily by Muslims for Muslims. And I'm going to jump to the third bullet point, because I don't want Dr. Yahia picking me up and saying that LARIBA is not only for Muslims. I know that, but I'm just making I wanted to cite you as an example of an Islamic mortgage lender, but I know that you're not solely aimed at the Muslim community. But I've given examples here of Islamic retail banks in Muslim countries. If you look at the statistics for the Islamic banking sector in Malaysia last year, then there is there is no change in the growth of deposits throughout the year. So one might have expected to see a withdrawal of deposits or a reduction in financing in the Islamic sector of the Malaysian banking market after 11/9. It didn't happen, right? Because those people who are investing don't really care what people in the New York Times are saying about Islam. They have a financial relationship which is important to them in their home country. We've also seen Islamic bonds being issued by Muslim governments. They're not, and I cite Malaysia, but also Bahrain, which has been expanding that Islamic bond market over the last few months, and that has been unaffected by the events of 11/9. So the clients of retail banks in Muslim countries, of Islamic retail banks, people who are buying, say, the Bahraini shukuk, the clients of Islamic mortgage lenders in the West, Islamic companies in the West, these people are impervious to the current scrutiny and criticism of Islamic institutions in the Western press, and the heightened concern and scrutiny by Western regulators. I don't want to be too hard on Western press. As a former journalist myself, I don't want to be hard on that profession. And there has been a lot of very good reporting about Islam in the last few months, but I think, as we all recognize, also some quite bad reporting. The scrutiny of financial institutions worldwide has been increasing, and Samy has made reference to this already. And this is unconnected to 11/9. It may be propelled to some extent by that, but it's unconnected, and Enron has already been mentioned. We can expect that accounting standards will be changed and tightened up as a result of Enron, and Islamic financial institutions are going to have to change and tighten up as a result of that. Greater scrutiny of offshore financial centers, that has been going on for some time, with international task forces naming and shaming certain centers which were deemed to be too lax in the controls that they put in place to avoid money laundering. strengthening financial reporting standards, and there's a long-term effort to require and encourage stronger internal controls and credit scoring in banks. Now, the point here is that Islamic banks, and again I'm being quite frank here, Islamic banks have not always been as competent as they could have been in terms of internal controls. That's doesn't apply to every Islamic bank, but there are certainly some where internal audit, internal controls are not as strict as they might be. It is going to be harder to get away with that in future. There is going to be much greater scrutiny, presumably from domestic regulators, but also from international regulators. So if you are an Islamic institution operating from somewhere, let's say in the Middle East, and you want to operate here, you're going to have to show a lot more in terms of your ability to manage risk. One of the main reasons why the Financial Services Authority in the UK, which is the successor regulatory body to the Bank of England, one of the key points the FSA asks if someone wants to come into town and set up a bank is how good is your risk management? And it's going to be asking harder questions about risk management now as a result of post-Enron, greater scrutiny of offshore financial centres, international efforts to tighten internal controls and credit scoring. That will be propelled, given an extra push by the events of 11/9, now that people realise how easy it has been to move illicit money around the world. But the main point I'm making here is that we shouldn't see that simply as a reaction to 11/9. You've got to get with the program on all these things. And you would have had to get with the program on all these things if 11/9 had not happened. Just to step back from this, there's two ways you can regulate. You can have a rule-based system, or you can rule by the spirit of regulation. And the US system has been very rule-based. That is to say that here's the barrier, and as long as you stay this side of the line, then we don't have a problem. Whereas the European system has been much more that you have to stay within the spirit of regulation. And that's why we Europeans say that Enron could never have happened in Europe. We would say that, of course, wouldn't we? But the reason why we say it is because our system is much less rule-based. Now, I would expect that one of the results of Enron is going to be that there will be many more rules imposed. What happens with a rule-based system is as long as you're staying this side of the line, you're okay. So everybody makes sure they're right here on the line. Because you're okay if you're there, but you're making your maximum profits. You've got the greatest leverage. Whatever it is that you want to do to push your financial structure to the limit, you're fine. You're on the right side of the line, but you're taking a lot of risk. We're going to see more laws, more regulations coming into place post Enron. We can have a debate about whether that makes a financial system safer or not. There will be costs involved in that. It costs money to adhere to laws. Moving through, and I just have two more slides I'd like to address. The attitude of Muslim governments to Islamic finance is going to be a key to its development now. The governments of Muslim countries tread a difficult path in managing domestic Islamic sentiment. Okay, you have to let people let off steam. You have people in your society that feel more religious sentiment than the government does. The government has to allow these people to express their views. That's letting off steam. But on the other hand, they don't want these people to challenge their right to rule. You have to keep it under control. I'm not expressing an opinion on that, I'm just saying that that's how it is. And that's a difficult line to tread. Now, governments always influence and frequently control. I'm talking about the Middle East and beyond, the licensing of financial institutions, the regulation of financial institutions once they've been licensed. They control the enforcement of the law, and not just financial law, but they control the enforcement of the law. and they control the soft boundaries of acceptable religious activity. Okay, if you take the example of Egypt, and I'm sorry if I'm being too frank, but who gets arrested and when and for what reason and when they're let out can be decided by the government in order to decide where they want to tread on that fine line between allowing people to let off steam and keeping it under control. Okay. Now, the question is, how are they going to manage this at a time of very intense Islamic sentiment? All right. You've had a situation where people who are Muslims were responsible for some terrorist acts. You have people who are going around saying, well, that's how all Muslims are. We know that's not true. You have a situation where the Americans and their allies have been taking military action against a country which happens to be Muslim, Afghanistan. It may take action against Iraq. There's a lot of uncertainties here, a lot of things that Muslims are trying to get their heads around, and how Muslim governments deal with that is going to be very important, and it's going to directly affect how Islamic financial institutions are treated in this country, in their own countries. And I don't know, and I'm sure there are people in this room who do know, but I don't. I don't know exactly how that situation is developing. Whether Muslim governments are trending towards greater democratization as a reaction, or whether they're trending towards greater control. Whether they're going to allow, for example, greater freedom to Islamic financial institutions, or whether they want to clamp down on them. But that's going to be an important determinant of the future of Islamic finance in the Middle East and in Muslim countries. And my final point is that Islamic finance is multifaceted. And this slide is really just me saying I find it very difficult to talk about Islamic finance as a single entity. You know, my remit is to talk on the effect of 9/11 on Islamic finance. And my response is really to say, but Islamic finance is multifaceted, and it's going to affect different aspects of Islamic finance in different ways. So it's difficult to define what we mean by Islamic finance. And some institutions which are not explicitly Islamic are operating in an apparently Islamic, in ways that are to some extent Islamic, and I quoted Grameen Bank in Bangladesh. So the impact of 9/11 on Islamic banks will be multifaceted. So it's very difficult to generalize about the impact. And with that, I'll finish.
Thank you very much, Andrew. If you don't know what Grameen Bank is, it's a pioneering bank from Bangladesh. Dr. Muhammad Yunus, who pioneered the concept of micro-lending, and now it's becoming an international effort. As a matter of fact, against the advice of many so-called revered Islamic bankers, I invited Dr. Yunus to list his name as a candidate for an award of LARIBA. And I wanted to underline an important factor, that it's not the interest and the mechanics that we talk about, but it is the intent and the differences in that said. So anyway, he said, I don't want to, because I've been abused by many of the so-called revered Islamic bankers. That's an admission. I may be wrong, so those who agree with me, good. Those who disagree, like somebody who wants to raise his hand, I don't want to get into this discussion. Thank you. So thank you very much, Andy. Now we have Professor Mahmoud El-Gamal. Professor Mahmoud El-Gamal is really in my humble opinion, a gift to the concept of Islamic banking in the world. First of all, he is talented, pioneering, and he's daring. He's not afraid of calling a spade a spade. And this is the mission that we are all about. As Muslims, we have to call a spade a spade. Professor Mahmoud El-Gamal did his undergraduate degree at the American University in Cairo, moved into the United States, did his master's degree at Stanford, And you will hear some very nice university names. On to Northwestern University, where he did his PhD, on to Caltech to teach, and I think he taught game theory, and what else?
Econometrics.
Huh?
Econometrics, ancient Egyptian history, philosophy of social science.
Many things. And you got to see his website. After Caltech, he was lured by the International Monetary Fund to work at the International Monetary Fund, and he was in charge of the Palestine desk. And after that, he went to work at the University of Wisconsin Economics Department. And finally, he is the first ever chaired professor of Islamic banking and finance in the history of the United States. And this is a great achievement. Let me tell you something, because I am in this business. It is very difficult to get your name as a candidate in any of these universities. I promise you. My business is to educate my kids to the best, my wife and I. And we know universities very well. To get your name to teach, let alone being a professor there, tenured professor, it's very difficult. So this is a testimony to the quality of man he is. He's a Hafiz al-Quran. He's an expert on Islamic Sharia, on the seerah of the Prophet ﷺ. He's an avid reader. And it is a delight to see this fresh air in the business of Islamic banking. Professor Mahmoud El-Gamal.
Bismillah ar-Rahman ar-Rahim. Thank you very much, Dr. Yahia. As usual, you're too generous. Today, my charge this afternoon is to talk about the Islamic brand name in Islamic banking. This pertains more to so-called Islamic banking in the Middle East and Asia, mainly because there is no Islamic banking, so to speak, in the United States or the West. There is Islamic finance, but not Islamic banking. And hopefully I'll make... inshallah. Just to remind you, for those of you who were here in the morning, when we were talking about different faiths, we're talking about religious brand names and why some banks have to call themselves Islamic. Again, I'd like to quote Martin Luther. This is how I ended my morning talk. Martin Luther said, a Christian cobbler does not make a Christian shoe, he makes a good shoe. And so an Islamic banker would not be engaged in Islamic banking, he'd be engaged in good banking. Now, I want to go quickly over what I think of as the current state of Islamic banking. And I would like to start on the liability side. I think Islamic banking started completely on the wrong footing. It started on the basis of the idea of a two-tier mudaraba. That is, you, instead of depositing money with a bank and earning interest, the idea is you become an investor. You hold a profit-sharing investment account. And I think that's been a complete failure and eventually will lead to the failure of Islamic banking in the Middle East or wherever they adopted this model. And the reason is that all the prudential regulations that Moody's monitors and that the Basel Accord that Andrew spoke about and many of the auditing and accounting agencies adopt, all of those prudential regulations are put in place to protect depositors, debt holders, first claimants. But the profit-sharing account holders in Islamic banks basically have absolutely no protection. They don't have the protection of being the first claimants on the bank's capital because they're not debt holders. And at the same time, they do not have the same voice as shareholders would if they were in a corporation. They have no representation. So in a sense, it doesn't matter whether or not the bank is solvent because they're not first claimants. And at the same time, because they don't have control over the managerial policies, they do not have representatives in the board of the Islamic bank, the alignment between their interests and the interests of the shareholders or the owners of the bank are quite lopsided. If you actually read the literature quite carefully, there is an organization in Bahrain called AWOFI, the Accounting and Auditing Organization for Islamic Financial Institutions, and most of what comes out there is talking quite explicitly about allowing leveraging and the fact that the profit-sharing account holders provide a cushion for the shareholders so they can leverage further and basically get higher returns without enduring higher risk. And that is completely unequitable. I think a combination of bad economics that suggested that Islamic finance would have to be based on mudaraba, together with careless jurists who got fooled into thinking that this is the way Islamic banking should be run, resulted in the catastrophes we heard about from Dr. Yahia early on, and I think there will be more, unfortunately, to come, because it's run by investors who basically use the risk cushioning from shareholders in order to get higher rates of return without sharing with them. In addition, because the only thing, once you have that risk cushioning, the only fear that an Islamic banker has is that the account holders, the profit-sharing account holders, will walk away and go to another bank. And so what they do is they create special internal accounts for smoothing the rates of returns that they pay those investors. So if they earned a high rate of return in any given year on their investments, they pay their account holders still something that's close to the interest rate paid in the market, and they keep the rest in that special account, so that in years when they have lower rates of return, they can bump them up a little bit. In certain years, they even don't take dividends as owners in order to make sure that they pay competitive interest rates. But the result of that is that in good times, the investment account holders don't get to share in the upside of the profits, but in really catastrophic cases, because they're neither debt holders nor, so they're not first claimants, nor are they the ones who control the manager, they basically get the short end of the stick. So they're exposed to more risk and get lower return. In addition, accounting agencies like AWOFI put in place rules that assets that are held by those Islamic banks have to be booked on the face value that they acquired, rather than being marked to market. And when you do that, basically you give an incentive to the managers to engage in what's called gains trading. That is, the good assets that are underpriced on your accounts are the ones you're going to sell in bad times, and the bad assets are the ones you're going to keep in bad times. That's exactly what you do not want to happen if you're an investment account holder. So that's all on the liability side. That's why Islamic banking was a bad idea, the way it was structured. Now, on the assets side, it was clear that all it is a secured loan by another name. So we see that through the efforts of a number of Islamic banks, or banks that operated in the U.S. for a short period of time, they managed to get the OCC to write letters about murabaha and ijara, basically saying, oh, all they are secured loans. We know secured loans. Banks engage in secured loans all the time. You can call them anything you want. We accept them. And so on the asset side, they were able to mimic the conventional banks, and at the same time, they can have that excess leveraging without giving control to the investment account holders or the protection of being debt holders and first claimants on the capital in case of default. Then I want to coin a term, if I may. The way I think of Islamic banking working, especially in the Middle East nowadays. For those of you who are not in this area, you may not know what arbitrage is. Arbitrage is what good people in finance do. Those are the people who make money no matter what happens. You basically find something that has two different prices, buy it where it's cheap and sell it where it's expensive. And all of finance is built on arbitrage pricing. That is that if such an opportunity exists, somebody will take care of it and it will not exist much longer. And so prices have to be the same everywhere. I think Islamic banks engage in what's called Sharia arbitrage. Basically, you have small community-based Islamic finance institutions that may not be as competitive as the big banks out there. And it's understandable why they're not as competitive. You don't have the developed secondary markets. You don't have the economies of scale. You don't have the trained professionals. So they notice that the cost to the consumer of the products of those Islamic banks, this real Islamic banks, let's call them that, is a little bit higher than the conventional counterpart. So they say, we're going to engage in Sharia arbitrage. We are going to come in with our big bank, and we are going to capitalize on that difference in price. And the way we're going to do it is we're going to fool our Sharia scholars. They think that the particular contract that is the secured loan offered by a conventional bank is haram. That's fine. What we'll do is we'll structure something that does the exact same effect but has an Arabic name they can read in their 18th century books, and get them to approve it. and as a result be able to use a line of credit from a regular bank, where if used for a regular mortgage, maybe they can get 6 3/4 or 7%, and then use it to sell it to compete with the Islamic institutions and maybe get a higher rate of return. We capitalize on that difference. That is Sharia arbitrage. My view about this is that there are many ways to sell your soul to the devil. The worst is to exploit the religious in the name of religion. So what I'm going to give you is my 10 rules of how to deal with Islamic banks. Thank God, so far I've never accepted a penny from an Islamic bank. I hope to keep it that way. And I've never dealt with one, but I can give my opinion. And some things that people do I like, others I don't like. So I'll give you, it's my top 10 list. The first question you ask them is how much of their own money are they putting where their mouth is. And compare that to how much of your wealth they're asking you to put into it. If they're saying you should put half your wealth with me and I'm only putting 5%, then they're trying to leverage. They want to get a higher rate of return and have you carry the risk. If they're not putting their money where their mouth is, don't trust them. Second, beware of quote-unquote scholars with no credentials and much fanfare. I'm not going to name names, but you can see them. Just meet them at the airport, meet them at the supermarket, and then meet them at a conference or an Islamic bank. Compare the way they dress, the way they talk. Ask them where they do their banking, and ask them what credentials do they have. Why do they wear particular types of headdress? Do they wear it most of the time or only when they want to parade as scholars? Ask what regulatory agency oversees their operations. I think it was quite appropriate for the British authorities to say to Al-Barakah, if you're not regulated in your own country, we don't trust you. And so the question I'd like to ask always is, tell me again why you're licensed in the Caymans or the Bahamas or somewhere offshore. There's a reason. They do not want to be subject to the scrutiny and the protection for the consumers that legitimate banks are willing to deal with. And remember, those regulators, you pay for them. Your tax dollars pay for them to make sure that your interests are protected. So make sure you don't get to deal with a company that bypasses that. Then, if you pass all those tests, you sit with them and say, what is it that you're doing differently? What are the advantages and disadvantages of what you're doing differently? First hint, there is no free lunch. If they tell you, oh, it's better along all the dimensions, that does not make sense. In my view, it's correct to do the marking to market and make sure that the rate of return that you have is actually determined by market prices, for instance, a rental on an asset that's being financed. But there's a downside to that. If there are price margins that are not correctly reflecting market forces because of bubbles, etc., you have to deal with it. There is no free lunch. If you're doing a lease to purchase versus partnership, again, the question is, are the properties going to be appreciating or depreciating? So you have to understand all the advantages and disadvantages, and there's nothing that will be better along all dimensions. And if they start saying the only difference is some Arabic name, that we call it Murabaha, and you can read that name in an 18th century book, then go back to 10 and start thinking about who are those scholars, what are their credentials, and so on. So they have to explain to you why the Sharia is telling them to do this and what is different. They have to be able to explain it to you in dollars and cents. And then this is the I call it the snake oil salesman test. Beware of bankers who all of a sudden, when the cash starts drying up in the market, appear with an extra slide that says Sharia compliance. Unfortunately, I saw many of them in the Middle East last week. You can tell it's the same sales pitch they've been offering all around the world, and they didn't bother with the Middle East market because it wasn't that big. And all of a sudden, with the market crash, they couldn't get VC funds anymore, so they figured they'd go there and say, oh, VC, that's Sharia compliant. Let's go and sell it to the Muslims. That's always, if they've only appeared after the cash dried up and you can tell that the Sharia part of it is contrived, don't trust them. And then, if they tell you that the difference is Sharia compliance, ask them, what is the objective of the Sharia in this case? And then, once they explain it to you, if they can, ask them, would you abide by the restriction in any case, even if the Sharia hadn't told you that? Because once so you didn't know it ahead of time, then you saw that the Sharia put this particular restriction. Now that you understand what the restriction is about, wouldn't you do it anyway? And once that's the case, well, we'll get later to it. And then be suspicious of bankers and consultants who are offering Sharia-compliant products. And that's the word Sharia-compliant. I hate that term. Again, ask them what are the advantages and disadvantages and what are the intentions of the Sharia. But just ask yourself, if all they say is Sharia compliant, ask yourself if you would pay more at the vegetarian salad place just because pork is forbidden. And then if they can explain to you what the Sharia says clearly, why they abide by it, why those restrictions are in the Sharia, ask them, then why do you have a Sharia board? Obviously, they serve no purpose. If they can explain to you that this is the Sharia, this is the intention, and this is how we abide by it, why do you need the board? Why do you need the legitimacy with the names of the so-called Sharia scholars that they have? And then, if it's not so clear, ask them, well, are those scholars really that trained? Are they CPA certified? How do I know they know how to read a balance sheet, let alone determine whether you're hiding debt in a special purpose entity? I mean, we know people from Anderson couldn't see it. How can we trust somebody just because he was trained in jurisprudence, if that they know how to determine whether or not there is illicit debt on your books? And then if they ask them if they're advertising their products only to Muslims or to non-Muslims as well. And if not, ask them why not. Why aren't they selling it to non-Muslims? If they really think it's a better product, why aren't they marketing to everybody? And again, as a hint, ask yourself, would you go and eat at the restaurant only because its meat is halal? Don't you also want to know that it's good? And then if you're satisfied with 10 through 2, ask them, then why do you have to call it Islamic? Why isn't it just a good shoe? Thank you.
Well, thank you very much, Dr. Mahmoud El-Gamal. And Dr. Mahmoud El-Gamal is working on a voluminous book with all documentation, original documentation, not recycled documentation, in English, and it will be available shortly, inshallah. We're very, very proud of the research. We are now going to open the floor for questions and answers, and now let me put you the rules of Yahia Abdul Rahman on question-answer sessions. Question has to be short with a question mark at the end. Right? In other words, if it does not have a question mark at the end, I don't want to hear it. So please, a question with a question mark at the end. And respect the chair. If the chair says thank you very much, that means the end of the story. Then we can move to somebody else. We have almost 40 minutes for discussion, and we will go through it.
Is LARIBA considering a bank?
Our group owns a bank called the Bank of Whittier, and we've had a lot of difficult times with the Office of the Control of the Currency because of some of our brothers who misrepresented facts, tried to get their business through. These two OCC rulings that made the OCC and the Federal Reserve think that Islamic banks take ownership of title, and that is on the bank books is a no-no because it's considered Oreo or other real estate owned, and that's not allowed. So finally we broke through, and they understand. They have reviewed our files. That has been sanctioned by Freddie Mac, and with the support of Freddie Mac we are going there, and we pray, make prayer with us inshallah, that we will have the first asset-based Islamic banking and finance. My vision is to have a community board that will be represented by all faith, and that community board will be represented by the rabbi in town, the priests in town, the Muslim leaders, the Buddhist leaders, so we can bring all people with the moral and ethical quality that is necessary. So make a prayer for us, inshallah. Thank you.
I'm extremely concerned about accountability. So I'm glad this whole session, emphasized accountability so much. Historically, I think Islamic civilization declined primarily because of lack of accountability. And it's amazing how long it survived in spite of that. So, and the first thing that Umar ibn Khattab said is, if I don't do things right, then straighten me out. He didn't say it correctly.
Question mark, yeah.
He said straighten me out.
Question mark. Where is the question mark?
The question mark is,
yeah.
Are our distinguished scholars working on a set of rules,
yes,
of accountability and operation for banks?
Thank you. You want to talk about Ayofi, Mahmoud? I'll talk about Ayofi. Ayofi is a humble effort towards that accountability thing. But you have to understand that working in the Middle East, trying to change things in the Middle East, takes a long time. There's a lot of sensitivities and so on. But there is a very smart young man. As a matter of fact, I just saw him in Malaysia. I came back Thursday. His name is Dr. Rifat Abdul Karim. He's from Sudan, and very, very eloquent leader. And he used to work for Ernst & Young in Bahrain. And he is developing a set of rules and regulations that are not very different from the gap accounting systems, with some legal things. As a matter of fact, he single-handedly was called to speak to Mr. O'Neill, the Secretary of Treasury, who came with a lot of apprehensions about Islamic banking. And he gave him a very, very good report. Mr. O'Neill was very, very impressed by the efforts, and we're supporting what he's doing. And I understand the kind of environment he's working under, but we wish him the best of success.
On the, I mentioned the issue of accountability in the case of Enron earlier, and where the Justice Department had actually indicted a whole institution. So one has to also keep in mind that what is the responsibility of individuals that work in a corporation that have not really participated in any wrongdoing in that institution? Should these individuals also be responsible to lose their jobs because of the wrongdoing of a certain individuals that work in that corporation? In Islam, we have a fine line and that says "Allah tazaru wazratun wazra ukhra." So why should I be responsible for the actions of others that worked in that same corporation? So in the Western model, we probably see accountability pushed all the way to the extreme by indicting the whole corporation.
The question I have is, I'm now aware about how you calculate and look at providing loans to businesses and to homes.
Financing.
Yeah. The question I have is, on the other side, if we wanted to participate, for example, depositors, is that something that you do, and how do you calculate any benefit from participation? And the other aspect is, are you a private company? Are you in your expansion, do you look for maybe additional investors?
Yeah. American Finance House is not a bank. It is a finance company. A finance company means it cannot go out and solicit funds from the public because it is illegal. You have to get approvals, not approvals, but at least registration with the Securities and Exchange Commission. Now, we of course are open for investors, people who want to invest with American Finance House LARIBA, if they are what we call accredited investors with a net worth of $1 million minimum and at least $200,000 per year, wherever that thing is. So we cannot go out with a prospectus to raise money. Yes, we are a private company. We are registered as a sub-chapter S corporation, and we stand for a challenge. Our challenge is very simple. We want to return our investors a rate of return that is at least 1.5% to 2% higher than what the CD at a bank would give you. And alhamdulillah, we have fulfilled that obligation over the last 14 years. Not a single person who invested, who asked for his or her money, was told, sorry, I lost your money, or sorry, I don't have your money. And by the grace of Allah, we've been very successful. The model we want to build, and we hope we'll be successful at it, is to have the bank and the finance company together. Then we'll have the depository function, and then we can really serve the community at large. The problem in America is that most community banks, so-called presidents, they have become like a club. And you go out and try to hire a president. If he's not approved by this and that, then it becomes a club. We want to change that. And you mark my word, by the grace of God, we will change it. And you mark my word, by the grace of God, we will bring to America something America needs. And that is Jimmy Stewart in the movie It's a Wonderful Life. Please go and watch that movie. And I'm very serious about it. Go to Blockbuster Video. It's $1. It's in color. What we did, we took the wings and the bells and the angels and all of this stuff out, and we focused it on the banking side of it. This is a man who refused to work in his father's savings and loan association, for those who do not have the time to watch it, and he belittled it, and he told his dad, "Dad, this is pennies and cents. I want to work for a big corporation." His dad dies, and then he got into a conflict with the big financier Huncho, who wanted everybody in the city to live in his crummy apartments. And I've seen this movie so many times because it captures my imagination. I call Jimmy Stewart the first LARIBA banker of America. And anyway, be it as it may, he, during the, as a matter of fact, the movie was made in the psychological campaign by the United States government. I don't know if you know the history or not, Jim. It was done by the psychological campaign by the United States government to regain the confidence of the American public in the financial system of America after the crash of 1929. And so he got married and he was going with his wife to their honeymoon, and he saw a run on the bank. What's a run on the bank? A lot of people coming in trying to get their money out of the bank, and then he goes in and he tries to convince them. So he tells them, please, understand, your savings are invested in Mr. Smith's home, and your savings are in this, and so on and so forth. So anyway, he gets a call from somebody, and he says, well, the big banker in town is willing to buy you all 50 cents on the dollar. Then he started convincing people. So, well, listen, this is your company, this is your cooperative. Then people started coming to their senses. They ran out of money. Their honeymoon money was used to cover the bank. These are the kind of people we want to work in Islamic banking. As a matter of fact, before somebody works for American Finance House LARIBA, they live in our houses for at least a month. They eat dinner with us. We know their character, their personality, because we cannot make mistakes. We cannot make a failure because it's a big responsibility on our part, and we're very serious about it. They come and sit down and we talk and we act and we reflect so we can know who these people are, because we are doing a movement here. So anyway, the savings and loan flourishes. They move people from their crummy apartments, their homes. The LARIBA banker, Jimmy Stewart, does not only provide them with the money to build the beautiful homes, he goes out, he and his wives, and helps them moving their things into his own car, breaking bread in front of. The only thing about Jimmy Stewart not being LARIBA, he was drinking wine in front of the house. So that will have to change next time. So, and then afterwards, of course, he runs into a problem because the banker takes away some of his big money, and he runs into a problem, and the whole city runs for his rescue. Please watch this movie, because this is the essence of community banking. This is what the Prophet ﷺ was looking for. It's not كَيْ لَا تَكُونَ دُولَةٌ بَيْنَ الْأَغْنِيَاءِ مِنْكُمْ, where the rich keep passing money. Wallahi al-azim, I swear to God, and Allah is my witness. A friend of mine, very high up in one of the large banks in San Francisco, it's headquartered in, he called me and said, "Yeah, what are your people trying to do?" I said, "What's going on?" I said, "They spent $180,000 on legal fees, and the bottom line was to change the word interest with the word profit so it can look Islamic." And he said, "This is very dishonest. I don't know how can these people call them," and he was not a Muslim. This is not about mechanics, because the difference between marriage and adultery mechanically is the same. It is the intent, it is the spirit, it is what you're out to do. So I hope I answered you in a long way. Thank you, Muhammad.
If I recollect correctly in the morning, Dr. Gamal mentioned in his lecture that you can have a riba without interest, and you can have an interest without riba, or something like that. Yeah. If you remember that, could you please elaborate briefly? Thank you.
all you need is one counterexample in each direction, right? So to show that there is riba without interest, just think of riba al-fadl. And the famous example is the hadith عن أبي سعيد الخدري رضي الله عنه, the hadith of Bilal when he traded tamr for tamr, and Rasulullah sallallahu alaihi wasallam was angered and said, وَيْهِ عَيْنُ الرِّبَى لَا تَفْعَلْ, and so on, as well as, of course, the famous hadith also عن أبي سعيد الخدري رضي الله عنه about the 6 genera: gold, silver, dates, salt, wheat, and I don't remember which one I missed, barley probably, and that they have to be hand to hand and in equal amounts, and any increase is riba. So even if they are hand to hand but in different amounts, there is no time, but there is still riba if they're in different quantities. So that is riba without interest. To go the opposite direction, interest without riba, take I own this computer. If you were to buy it from me right now, it's say $1,000. But if you buy it now and you're going to pay me over 5 years, we decide on the deferred payment, and let's say it turns out to be $1,100. Let's say you're just going to pay me full amount in 1 year. Any second grader who's just learned division knows that that's 10% interest, but it's not riba. So here's one example of interest without riba. Here's one example of riba without interest. It's just bad translation done by people who were not fluent in Arabic, where the word riba comes from, or English, where the word interest comes from.
I just want
business,
to
where the concept of interest comes from.
I just want to add a proviso here. This is called the last one, called murabaha, or cost. We like in our company to call a spade, so we call it cost plus. All right, so it's a cost plus. Now the question is how you define the plus. Now some smart bankers say it is tied to LIBOR. LIBOR is a London Interbank offering rate, which is an interest rate. So you go to the Sharia advisors and you say, give me a break. The whole idea is to take people away from getting tied. Oh, no, we have this study. And I said, no, listen. We have our brains too, And that's one thing we want to tell you all. You are all educated. You all went to school. Not to waive the function of your minds when it comes to making decisions about your faith. Because on the day of judgment, you're saying, oh, but this mufti told me so, will not count. You will be asked, didn't you have an eye to see with? Didn't you have an ear to listen with? Didn't you have a heart to feel with? Didn't you have a mind to think with and research? Now, the murabaha, which is a cost plus, he just discovered, there is an interesting proviso for it. If you say that I'm going to sell you this computer for $1,100 divided over 5 years, and suppose in the 4th year you cannot pay, and you extend it to 7 years, the $1,100 stays $1,100. You do not increase it, and that is the part of your risk.